What's up, y'all? Happy Monday and welcome to the latest edition of the Hashing It Out live stream. I'm your host, Colin Harper, head of content and research at Luxor. Thanks for being back with us after a 2 week break. I was out of office, but now I'm back, and what a time to come back to the biggest exchange collapse in crypto history. That will be the focus of today's live stream. There was some mining news last week, mostly related to Q3 reports. We're going to get to that next week and hopefully have one of our contributors, Yaron Mellerud, on to talk about that in more detail. But since the entirety of not just the Bitcoin ecosystem, but also the news cycle is sucked up into the FTX and Alameda fiasco for this week, I thought might as well lean into the chaos and get a live stream out on some of the latest stuff with that and kind of just a play-by-play of what exactly happened. I know most of you are probably up to date, but I just wanted to do it because honestly, I don't really think anything else is going to capture as much attention as that this week and probably for the foreseeable future. We're going to start with some analytics, looking at what has gone on with hash price and with ASIC prices in light of Bitcoin's drop during FTX's collapse. And then we'll finish out the episode with a little play-by-play on just what happened, what is happening now, and what is likely to happen into the future as FTX and Alameda go through Chapter 11 bankruptcy filings. So with all of that said, let's dive right into it with some hash rate index metrics. So in light of FTX's collapse, Bitcoin puked and broke below the 19K support that we had been seeing for the past few months. It dipped to as low as I think 15.5K, maybe it was lower earlier last week. And as a result, hash price has been feeling the pain. As you can see from this chart right here, hash price hit a new all-time low of $55 per petahash. After Bitcoin bounced following the sell-off, it went back up to $63 per petahash. Bitcoin puked once again, and it revisited that $55 per petahash level, and now we are at roughly $58 per petahash. Now, not really much else to add to this other than, it's been a pretty harrowing 2022, specifically the second half of it for Bitcoin miners. And this is just another hard knock in a series of hard knocks that Bitcoin miners have been facing so far. One thing I would like to highlight with the recent hash price drop, I'm going to go to our rigs page here on Hash Rate Index. This has put a lot of miners in hot water, even with the newest Bitcoin mining equipment. So let's take a look at the S19J, for instance. If you are hashing at $8 or 8 cents per kilowatt hour, you are basically at break even. Your daily profit is only 10 cents per day, given current hash price. So anything above that and really at 8 cents a kilowatt hour is more or less underwater at this point. If we look at the S19 XP, newest generation hardware, daily profit at 8 cents is still $2.30 per day. Still not what you'd like to see. And if we go ahead and take a look at the M30S at 8 cents, you're underwater as well. So just to kind of illustrate what we're seeing there in terms of break evens for a lot of miners, this most recent drop has put them into underwater territory or at break even. But we still have really yet to see Bitcoin's hash rate taper as a result. It has fallen a little bit from this most recent high of 274 exahashes a second. I believe that's a high. Yes, it is. We've fallen from that about 4 exahashes or so, but we're still up significantly from August when we were still just at 200. Bitcoin's hash rate has increased by 70 exahashes since then to its current level of just under or roughly 270 exahashes. So, like I was saying, we have not seen much hash rate tapering since this event. I expect that we will continue to see that over the next few weeks. Remember, hash rate on the 7 day is a lagging indicator. It takes the 7-day average, so it will take a little bit if miners are turning off, which I assume plenty of those in the higher cost levels are. We should see hash rate on the 7 day come down in the coming weeks, especially considering that we're still projected to have an upwards adjustment in the next few weeks. If you look right here on the sidebar, the next difficulty adjustment is estimated to be about 1.35%. That should come next Sunday or this coming Sunday. But who knows? Hash rate could start dropping significantly. Block times are still coming in on average 9 minutes and 52 seconds. That could change over the next week if we see a lot of hash rate come off. But if it doesn't change, then definitely expect to see more hash rate drop after this coming difficulty adjustment. One thing to point out in light of all of this Bitcoin selling, the one silver lining we have is actually that transaction fees are up as a result. So if you look at BTC hash price, we're actually seeing a little bit of a stabilization there and a little bit of an increase in a few sats per day per terahash as a result of all these incoming transaction fees. As you can see here, transaction fees are the highest they've been on average in the last 3 months. And if you look on this sidebar over the last 24 hours, we've seen 2.52% of block rewards have been transaction fees, and that's the highest it's been in a long time. So not much of a consolation prize, but it is something as people rush to sell, the min pool fills up and miners get a little more in terms of transaction fees. Moving on to ASIC index data here really quick. As you can see, we have reached all-time low prices for the 38 to 68 joule per terahash bucket. They're just below $15 per terahash at $14.96 per terahash. And the under 38 joules per terahash bucket, which is the newest in equipment, is only about $1 shy from all-time low listing prices. As you can see from this chart, it has been a steady drawdown all year, and with this most recent Bitcoin price drop and also the waning profitability that we have noted throughout October, prices for new gen and mid gen equipment have finally capitulated even further. We will probably see lower prices still as Bitcoin's price continues to suffer under the wake of bad news we are seeing recently, and as difficulty continues to climb. Now, obviously, we could see difficulty drop after this next adjustment if hash rate drops. But all that being said, ASIC prices right now are seeing some, rock bottom prices. Could still see them go lower, considering that mining margins have been absolutely crushed and people are still kind of wanting for rack space. So something to keep an eye on. Expect to see all-time lows for new gen ASIC prices in the next week or two. And with all of that in the books, let's go ahead and move on to the main course, which is the collapse of the erstwhile, penultimate exchange in the Bitcoin ecosystem, FTX. Now, FTX, depending on who you asked, is second only to Binance, maybe the third largest exchange in the game up until recently. And it is looking more and more, or it's kind of more or less confirmed at this point, that Sam Bankman-Fried and company, SBF, were running a massive fraudulent empire by basically mixing the businesses of FTX, the exchange, and Sam Bankman-Fried's prop trading firm, Alameda Research. The too long didn't read before we get into the major story is that Alameda was dipping into FTX customer deposits to not just fund its investments, but to also cover losses. We don't really know what happened in terms of what caused it to lose so much money this year. It's looking like perhaps it was that Alameda suffered significant losses in Three Arrow Capital's demise and the collapse of Terra and Luna. That's kind of just speculation at this point. A lot of people have put forth that theory it would check out, considering that was one of the worst collapses up until this most recent debacle. And it's looking like Alameda dipped into FTX's customer funds to make up for some of that deficit. And Alameda was also collateralizing its loans from FTX, if you want to call them that, with FTT, which is FTX's exchange token. So basically, borrowing from FTX, borrowing from FTX using its customer deposits and using FTX's own token, which FTX and Alameda controlled, and was extremely illiquid to underpin these loans. And with that, kind of just TLDR, we'll kind of get into how things unfolded. The real bombshell that set all of this into motion was this scoop from CoinDesk's Ian Allison. The title of this article is Divisions in Sam Bankman-Fried's Crypto Empire Blur on His Trading Titan Alameda's Balance Sheet. Alameda had 14.6 billion of assets as of June 30th, according to a private document CoinDesk reviewed. Much of it is the FTT token issued by FTX. So this kind of called into question Alameda's solvency, considering the majority of its assets were actually FTT's token, not some sort of blue chip cryptocurrency like Bitcoin or even Ethereum. As you can see from this article, as Ian tells us, as of June 30th, the company's assets amounted to 14.6 billion. Its single biggest asset, 3.66 billion of unlocked FTT that Alameda could conceivably touch because it wasn't locked up. And the third largest entry on the asset side of the accounting ledger was another 2.16 billion of FTT collateral. Among its 8 billion of liabilities also included 292 million of locked FTT. So this basically this called into question, how pristine obviously Alameda's balance sheet was, and if it was even liquid, right? Because FTT is owned primarily by FTX. The exchange controls the token, and it was also, along with Alameda, the largest market maker for the token. And when this dropped, people were beginning to wonder, if FTT collapsed, where did that put Alameda, right? And if Alameda is insolvent, what does that mean for FTX, considering it seems like both companies are a little too close for comfort? Well, at first, this didn't seem like the worst thing. It seemed like Alameda was in trouble. But if FTX actually had customer deposits and was good for the money that it has on its asset side, it wasn't the worst thing in the world. But then this bombshell from Wall Street Journal dropped on this was updated November 11th. I believe this came out on November 6th. FTX tapped into customer accounts to fund its risky bets, setting up its downfall. This was a scoop by the Wall Street Journal from a former FTX employee or an FTX insider. I don't have the full thing because I'm not logged in right now. But FTX chief executive Sam Bankman-Fried said in investor meetings this week that Alameda owes FTX about $10 billion, people familiar with the matter said. So when this came out, it was looking more and more, obviously, like Alameda was dipping into FTX's cookie jar, which was the customer deposits, and took roughly $10 billion worth of assets. Now, something to talk about before we go forward, as many of you probably already know, as rumors of FTX's and Alameda's insolvency started circulating, Binance, which had a hefty sum of FTT token, decided to offload it. CZ tweeted about this. I don't have the tweet in front of me right now, but if you go and look, you can find it pretty easily. And CZ basically tweeted saying that they were going to unwind their position in FTT, and whether Binance is selling or the market reacting to this, probably a combination of the two, FTT swiftly collapsed. As this happened, many people blamed CZ for setting all this into motion, but obviously, to set the record straight, or just to clarify, CZ was acting on market information, and FTX was already insolvent. They didn't have, any of the deposits that their customers actually gave to them to make customers whole, and Alameda was gambling away these customer deposits on their own platform, and they were going under with or without the fact that FTT was insolvent. I mean, the fact that they collateralized loans from FTX that were used with user deposits, is already just fraud on a massive scale, and you can't use your own token, which is, again, extremely illiquid and printed out of thin air, to actually seriously back a loan like that. That's notwithstanding the fact that Alameda using customer funds is already sketchy and illegal, right? So Binance's selling of FTT certainly accelerated the market's distrust and started bringing other things to light, but it's not the reason for this collapse. And so just to circle back on the kind of the arc of events here, Reuters followed up on some of Wall Street Journal's reporting and said that FTX owes at least 1 billion in client funds. That is, 1 billion in client funds are missing, and it kind of corroborated this number that Sam Bankman-Fried and company funneled $10 billion worth of customer funds from FTX into Alameda Research. The spreadsheet indicated between 1 billion and 2 billion in client money is unaccounted for, so it could be as high as $2 billion worth of FTX user deposits. And the real bombshell from this reporting, if I can find it here. Yeah, here we go. That FTX legal and finance teams learned that Bankman-Fried implemented what two people described as a backdoor in FTX's bookkeeping system. Basically, as far as I can understand it, and I haven't dug too far into it, Fried used a pretty clever trick in the code for FTX to make to kind of obscure where the money was going and that it was even leaving the system. And this backdoor was through this backdoor, Alameda drew the $10 billion worth of client funds that were misappropriated in this entire scandal. Now, as all of this is coming to light, you'd think that it couldn't get any crazier, but it actually does. We'll start first with this, that FTX claimed that it was hacked and that an outflow of $600 million occurred on November 11th in light of all of this catastrophe. Now, it doesn't take too much critical thinking to, posit that this was perhaps an inside job. We do not know who did it yet. Kraken's chief security officer sent a tweet the other day saying that they have identified the identity of the hacker after the hacker tried to deposit funds onto Kraken. The hacker also apparently tried to deposit funds on Binance, I think, and the funds were frozen. But basically, in the aftermath of all of this, 600 million just vanishes from FTX, and it seems that no one really knows who did it, at least not yet. More than likely, it was an inside job, but we don't know for sure until everything comes to light. And on top of that, users in the Bahamas reportedly were withdrawing funds from FTX. And according to some FTX team members, this was due to Bahamian regulators basically demanding that FTX honor withdrawals for Bahamian residents. It is now looking like the Bahamian securities regulator said it did not order this, and kind of just adds to the mystery of those 600 million that were hacked from FTX. This could also be an inside job. It seems more than likely that insiders, at least, were using this as kind of a clever way to get funds out. And it just kind of adds to the whole fiasco because it's just, one instance of fuckery after another with this entire thing. And that leads us to this is just another article confirming that the company is working with law enforcement over the hack, and that FTX CEO John Ray, who is overseeing the bankruptcy proceedings, confirmed that the hack happened, and they're working on seeing whether or not it was an inside job or where the money went from and who took it. Now, all of this leads us to the kind of latest news in all of this, which happened on Friday, and that is that FTX is filed for bankruptcy protections, Chapter 11, and according to preliminary filings, they were jointly filed FTX US and Alameda Research, basically saying that these filings said that the company has anywhere from 10 to 50 billion dollars in liabilities, and that is shared between Alameda and FTX. That is a huge delta between the low end at 10 billion and the high end at 50 billion. So it'll be interesting to see where that actually lands, and what ends up becoming in this bankruptcy filings. So those of you who know, with the Mt. Gox filings, Mt. Gox went bust, I believe, in 2013, 2014, and we are still working on settlement for a lot of the creditors in that case. It could be that this is also drawn out, but it could be quicker because this one had much larger impact. There are more companies that are involved in this, some big Bitcoin companies, including Galaxy, CoinShares, Coinbase. They all had exposure to FTX or had invested in FTX. And a lot of funds in the space also invested in FTX. And that kind of leaves us with just the question of what happens now. Like I was saying, a lot of companies had exposure to FTX. A lot of companies, um, I'm sorry, pause there. A lot of companies had invested in FTX or had held their assets on FTX, and it's already starting to seem uh, like we are seeing some of the fallout from this. Also, sorry, I just realized I was not sharing my screen for a lot of that. But here's some of the other articles that I was referencing. Here's the one that says Alameda Research estimates each company has 10 to 15. The filings estimate that FTX and Alameda have 10 to 15 billion dollars worth of liabilities. Um, and one quick thing before we go, because I'm running up on time, we're already starting to see some of the fallout from this collapse. BlockFi said that they will be shuttering withdrawals for the time being because they're not able to operate business as usual in light of the FTX collapse. Now, a lot of this is, again, rumor and hearsay. It hasn't been confirmed yet, but I've saw reports on social and through other media that suggested that part of FTX's buyout of BlockFi during the blow up in June was that BlockFi had to move all of its assets onto FTX for its custody. And if that is the case, then it's looking like BlockFi will go bust from this as well. I hope that's not the case. I hope that hopefully there can be some way to resolve this, but this is just an example of kind of the downstream effects that this bankruptcy will have. There were, like I said, just a lot of Bitcoin and crypto companies that had either invested in FTX and Alameda or held their treasuries and assets on FTX. So in the coming months, we'll see just how much damage this will do, and just hoping that it's as minimal as possible. And with all of that, we're going to wrap it up there today. Thank you so much for tuning in. I know this was kind of a not mining focused live stream, but this is just the biggest news to come out this year, and also probably the most devastating case of fraud and an exchange collapse in Bitcoin and crypto history. So it was worth the diversion. All that being said, thank you for tuning in. If you do not already, please follow us on Hashrate Index, at Hashrate Index on Twitter and at Luxor Tech Team. And please subscribe to our newsletter at hashrateindex.com/blog to receive breakdowns like this in written form every week. And with that, thank you all so much. Happy hashing. Have a good week, and stay positive, y'all. It has been rough, and it's going to get rougher.